Now, something that is forever embedded into my memory after reading, especially the New Market Wizards, was the necessity of having an edge. So I'm interested to get your take on this. What exactly is an edge? Like, how do you define it, and how do you know if you have one?
So first of all, there are people who misleadingly think that an edge is not absolutely necessary if you have good enough money management. In fact, there's a famous Wall Street saying that goes something like, even a poor system could make money with good money management. Now, that's absolutely one of the most ridiculous things that has ever been said. Besides not being true, it's just absolutely stupid. And the reasons it's stupid is for the same reason it would be stupid to think that you could go to Las Vegas and play roulette with a money management scheme and come out ahead. No, you can't come out ahead because the house has the edge, you have a negative edge. All you're going to do if you try to apply money management is to guarantee that you lose. In fact, actually, money management in a situation like that would be bet all your money one time because that's your highest probability of winning. So the best money management scheme is real betting it all at once, which is really the opposite of money management. So you can't be salvaged by money management. Now, the money management is absolutely essential, maybe more important than methodology, but it's not enough. You need to have an edge. So this gets down to, okay, so how do you know if you have an edge? Well, it's not one of those things you can look up or find a rule or prove absolutely. I guess you could see it in your equity if you show some consistency of making money without unduly large drawdowns. Then over time, you can begin to conclude that you have an edge. If you are good at the markets, people who are good at the markets, another trait that does typify really good traders is they have a high level of confidence. And that high level of confidence is impossible to have unless you're delusional, unless you do have an edge. So it's a type of thing you have to sort of feel and believe on your own. It's not something that's definitively provable or anything like that. It's just that if you're in that groove and if you're kind of making money with some consistencies and have control of your losses, you get to the point where you feel that you have an edge, and your equity confirms that. I mean, you could feel that you have an edge and you're losing money, then you're delusional, So, but if your equity curve is reinforcing your what you're feeling and seeing and executing your approach, then you can jump to the conclusion that you do have an edge. But you need to have an edge, and an edge does not exist without a methodology. I've never met anybody who has an edge that doesn't have a very specific methodology.
Yeah, that's really well said, Jack. And just while we're on the subject,